That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. We've got Adam Johnson, as well as Yahoo Finance's very own Jared Blikre, joining us here to break down the moves today. Jared, my friend, let's start with you on that close.
Well, thank you. As I was just saying about 20 minutes ago, Dow took a little bit of a stumble today, down 316 points by the close, 0.7%. And you can thank Honeywell, some disappointing earnings, or at least a market reaction to it there, IBM as well. And then United Health just has these continuing problems. The latest is with the DOJ, I believe. But here's the intraday price action on the Dow. You can see ended towards, if not at the lows of the day there, 44,694 is your final print. But the Nasdaq up 0.25% and lost a little bit of steam, but pretty close to the highs there. And then the S&P 500 as well, closing in the bottom end of its trading range for the day. Also can check in on the small caps. Those have been leading or lagging kind of ahead of the field here for several days. And let's check on the 4-day. Well, I'm not getting a price chart there, but I will tell you that it is down 1.58% on the day. So small caps leading the way down for those issues that did go down. And on the sector action, you can see we have more losers than winners here. Consumer discretionary, that is a Tesla story. We'll see that in a second, down 1.66%. Materials down also more than 1%. And then to the upside, we had energy. That was the biggest winner of the day, up 0.7%, followed by tech and communication services. That comes after those Alphabet earnings yesterday after the close. And by the way, we're still waiting on those Intel numbers for today. Here is the Nasdaq 100, and you can see Tesla here down 8.2%. Let's get a year-to-date chart up there. Not cooperating, so we'll just move on. Honeywell also in there, down 6%. I mentioned that because it is a Dow component. Intel down 3.66% for the day, and then Charter also down 4.5%. For the most part, though, aside from Tesla, you do see a lot of winners in the mega cap category. NVIDIA up 1.7%. So is Amazon, 1.73% for both of those. And then Broadcom just a smidge more than that right here as I'm circling. I will close here with the Dow, and I went over some of the losers before. I'll go over some of the winners here. Walmart up 1%. Chevron, again, energy was the leading sector of the day. That was up 1.75%. And then Merck up 0.2%, although it's down 14% for the year. We were also looking at that about 20 minutes ago. And I'll send it back to you on that one, Josh.
All right, thank you, Jared. Intel just crossing the wires here. Let's get to those numbers. It looks like Intel Q2 adjusted loss per share of 10 cents. It looks like the estimate was more like EPS of 1.1 cent. I'm looking for the revenue number. Q2 revenue, $12.86 billion. The street was at $11.88 billion. Looking ahead, let's see what they have to say for guidance. Q3 revenue, they're calling for between $12.6 billion to $13.6 billion. The street was more along the lines of $12.64 billion. Looking for CapEx guidance, expects CapEx to be lower in 2026. They say 2025 CapEx, they're calling for about $18 billion. Do have some headcount news as well. It looks like they're aiming for a headcount of 70,000 by year end. Job reduction actions total, it says here, 15%. Looking at the immediate reaction in the stock, Adam Johnson, we're up around 4% in the after hours. Interestingly, you used to own this name.
I
did. You were in Intel. Then you got out of Intel.
Yep.
How come?
It's too hard. And I don't think they know what they want to be. Though I will also note today's numbers are pretty good, and most notably the revenue guidance that you just mentioned, the original number was $12.6 billion, and they're saying it's actually now going to be 12.6 to 13.6. So they guided up their forward revenues. That's positive. But again, my problem is this company can't figure out, and they've literally flip-flopped several times, they can't figure out whether they want to make chips or whether they want to design chips or they want to actually do both, which is what they used to do. And so that's been the problem. They just haven't clarified their way forward. You know, I think the thing that would be most interesting is if they were to split into two, and they were actually to create two separate companies, Intel Manufacturing and Intel Designs. And then we'd have clarity on both, and we could set separate price metrics on each, and therefore price targets on each. But right now it's a mishmash, and it's kind of tough to quantify.
Yeah, to your point, the headline here so far, they did seem to offer this stronger than expected revenue forecast for the current period. I think that helps explain this pop, 5% in the after hours. Third quarter sales, 12.6 to 13.6. Analysts, looks like consensus had projected number at the low end of that range there.
And by the way, Josh, for those who are watching and say, gosh, I want to get on board, maybe I should buy some Intel. Actually, go buy some NVIDIA. It's easier because if Intel is guiding up revenues, you can be sure that NVIDIA is going to be guiding up revenues. And that's a more obvious way to try to participate on the upside. And NVIDIA reports in a few weeks. So that would be, I don't trade numbers. I'm not, I'm a buy and hold investor. But if I were trying to benefit from this news, I would go and just buy myself a little NVIDIA.
Well, let's get more on reaction from Intel earnings. So we have now Bob O'Donnell. He's president and chief analyst at Technalysis Research. Bob, Intel reports the stock is popping here in the after hours. What do you make of these results?
Well, as you guys were just discussing, look, the revenue numbers for this quarter were higher than expected. And most importantly, of course, the forecast was higher. Look, there have been challenges. And I understand the point that you guys were just discussing. Intel does, I believe, really want to be both a chip maker and a chip designer. And they really are trying to figure out that path. Look, Lip-Bu's only been in there for a quarter. The kind of changes they need to make are more than a quarter long, right? This is a multi-quarter, realistically, probably multi-year kind of complete turnaround story before all the benefits start to show up. A couple interesting things.
Let me ask you, Bob, just to stop you there, because I think you're touching on an important point. And I have lots of questions on the metrics of this print, Bob, and we'll get into that. But you're touching on an important point, which I do think there is this broader question out there, Bob, about what Intel is going to be. What is the game plan here? What is the strategy, Bob? We were talking earlier to our colleague Dan Howley about this, how honestly, Bob, we really don't talk about Intel that much on the show. We talk about NVIDIA, AMD, Broadcom, Micron. It feels like Intel is not in the conversation. So what is the game plan here moving forward?
Well, look, the game plan is they're going to focus obviously on x86, which let's not forget. There's still several hundred million PCs get sold every year. Lots of servers get sold every year. Intel owns the vast majority of the CPUs in those systems. And even in the NVIDIA, the big stacks, up at the top of the rack, there's an Intel Xeon CPU in there. Now, as a percentage of the total BOM, it's still pretty small now, but it's still there is the point. So you're going to see them build their own products, sell their own products. You're going to see them start to try and build more products for other people. That's the foundry side of the business. The way this thing was constructed, the reason why it's been such a challenge is they were so intertwined, making for themselves versus trying to make for other people. And so now as they tear those pieces apart, it's been painful, right? Clearly, it's been a big challenge for them to try and clarify all of that. And a quick glance at the numbers, they talk about inter-segment elimination. That's, when Intel sells the stuff they make to themselves, right? They have to pull that out of the discussion. And ever since they've kind of split off the foundry business, that's been part of the situation. They're focusing clearly now on 14A for external customers. 18A is likely going to be mostly Intel, maybe a little bit of some of the things they announced in the past, Microsoft, Amazon, I think a little bit of DoD stuff as well. But the big focus for future customers is 14A, which is still coming. So again, back to what I said earlier, I think this is still a longer term story. And in the interim, they have this difficult situation where they got to crank out as much x86 as they can, get that PC market renewed again, get themselves stronger back in the server business. They're shedding a lot of the other businesses. They just shed their automotive business. They sold off some of the Mobileye, still the majority owner in Mobileye. So they have their hands in it to some degree. But, they're focusing on their core. They're trying to figure out a better AI strategy, not with a GPU, because, Lip-Bu said, hey, look, we're not sure we can play that game. But there's a lot of AI work that's done on CPUs. A lot of it has to do with software. Intel actually is a stronger software story than a lot of people realize as well in terms of the nuts and bolts types of software that makes this stuff work.
When it comes to that PC business, Bob, I'm just curious, do you think we could be seeing, any kind of tariff-related pull in there? What do you think the trend looks like ahead?
Tariff calls are impossible to make these days, honestly, Josh. There was some argument that happened this past quarter. Maybe it'll happen again next quarter. It's really hard to say. The bottom line is, people are refreshing their PCs. We are starting to see the integration of new systems with NPUs built in them. Initially we saw Qualcomm do that with their Snapdragon X Elites with an ARM processor. Now we've got Intel doing that. They've got a stronger NPU. AMD is doing that as well. Microsoft is pushing this. So I think we will start to see a bigger corporate refresh. Not to mention, oh, by the way, the end of support for Windows 10. That's a huge deal. All of these things, I think, help drive the story around a renewed PC business, which Intel still owns the majority of, and so they would get the most benefit from it. But look, it's not going to be easy. Clearly, it's going to be a longer-term story, but I think they're trying to put the pieces in place, and I feel like Lippu's, got a strategy in hand, and he's trying to make it work.
Final question, Bob, just switching gears a bit on you here. Big tech CapEx, Bob. You saw that what Alphabet just forecast, right? Wow, that was an impressive number. We'll see what Microsoft, Meta, Amazon, what they have to say. What are the chip names, Bob, that you think are poised to benefit from that trend going forward?
Well, obviously, NVIDIA is going to be the biggest one, as you guys were just talking about, right? I mean, look, that's the easy bet because, all these companies are spending, they've already committed or announced these huge commitments. And the vast majority of that, of course, is going to go to NVIDIA. There's going to be other folks, right? I mean, there's the memory makers, there's the Microns of the world, there's the folks who help design the chips that do that, like a Lam Research. You've got Cadence of the EDA guy. I mean, there's a big trickle down in semiconductors. There always has been. And we'll start to see all of that because we will see a lot more AI infrastructure being built. And there's a lot of potential plays there. Eventually, we get to energy, right? I mean, people are talking about small modular reactors and all this crazy stuff to power all this AI infrastructure. So, I think there's a number of places where it goes, but clearly NVIDIA and then AMD. Sorry, I should have mentioned them too as well, right? AMD is clearly the strong number two there. Intel's a smaller player there. Qualcomm's a smaller player in terms of the data center. Both are stronger in client. So lots of different places to think about it when we talk about AI for the long term.
Bob, appreciate that instant analysis and reaction and insight, my friend. Thank you.
And we're just taking a look at what's happening. It's a tough construction job. They're building basements where they didn't exist or expanding them, and a lot of very expensive work. There's no question about it. And Tim has been with me for a long time, and you're in charge of the committee.
Indeed. One of the reasons why we wanted to see it was the overruns of the expenses, wanted to figure out why.
So we're taking a look, and it looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1.
3.2.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added. Our entire capital. Yeah, you just added in.
President Trump making that unusual visit to the Federal Reserve, turning up the pressure on the central bank. Trump inspecting the renovation underway at the Fed's headquarters. This coming as Trump, we know, has been relentless in criticizing Fed Chair Jerome Powell, calling for lower interest rates. The tensions between Trump and Powell renewing concerns of the Fed's independence. And here to discuss this and more, we got StoneX senior advisor and Yahoo Finance contributor. That would be John Hilsenrath. John, you saw and heard it just there. The president visiting the Fed, back and forth with Powell. What do you make of it?
Well, I mean, I think what the president is trying to do and what his allies in Congress are trying to do is humiliate the Fed chairman. I don't think in the end that it's going to affect the Fed's decisions about interest rates. The president has made very clear that he wants the Fed to cut the interest rate all the way to 1%. Powell doesn't show really any instinct, any inclination to do it. So, in terms of the Fed's cost overruns on these buildings, certainly these are big projects, and the Fed runs some very big budgets, and it warrants scrutiny. But I think the idea of tying that to a pressure campaign to get the Fed to cut interest rates is going to backfire.
You argue, John, that the Fed's independence, I think you make the case that it's already been compromised by Washington politics. Walk us through that.
Well, as I said a moment ago, the president is clearly trying to humiliate the Fed chairman. And I think there's a lot of talk right now in Washington about efforts to get the Fed chairman to quit or to fire him. I actually think the most important thing going on right now in terms of the Fed's independence is what's happening for the successor to the Fed chairman. So Powell is leaving his job one way or another next year, in a year's time, less than a year, by next May. And then the big question becomes who succeeds him. And I think it's the president is making very clear that his successor is expected to cut interest rates. So whoever gets the job is going to have to make some implicit or explicit promise to the president of the United States that he's cutting interest rates. And to me, that's compromised independence. I don't think Jay Powell is going to budge on this issue until he thinks it's right to cut rates. And I think efforts to humiliate him or to pressure him out of the job aren't going to work. But his successor is in this very difficult position where he's got to promise the president what he wants in order to get the job. And frankly, it isn't at all clear to me that interest rate cuts are what we need right now. Let's not forget, the inflation rate is over the Fed's target. It's above 2%. And I would not be at all surprised to see that inflation rate rising in the next few months.
Adam, get you in here. Your thoughts. Do you agree, Adam, with this call that you think the Fed's independence has been compromised?
Well, the way this whole thing feels to me is that it was a photo op, and you just saw it's very uncomfortable. You had President Trump standing, sort of towering over Jerome Powell, who almost looked like he was cowering. And it's this sort of made-for-TV thing where we're all part of the Apprentice, and it's happening every day, and it happens day after day. And I suspect that what President Trump was trying to do was effectively just throw enough sort of shade over this whole situation where it kind of brings judgment into question. And more specifically, it brings the Fed chairman's judgment into question, right? They talked about the cost overrun. He said it's 2.5. Well, now I hear it's 3.1. They're arguing over that. Well, it sounds like you're not on top of the numbers, right? And it just opens the door to say, hey, is your judgment really, what it should be? And I think that's what was really going on there. And I'll be honest, I found it a little uncomfortable. No one wants to see mom and dad fight. You don't want to see the president of the United States and the chairman of the Federal Reserve fighting or arguing, even if it's over numbers on a renovation. So, yeah, it's kind of a work in progress. It's kind of made for TV. It's kind of uncomfortable, and it's the world in which we live right now.
John, did you see this interview?
Let me say something about that photo op. I thought it was very, very interesting because the president said that the cost overrun had increased. It went from 2.7 billion to 3.1 billion. And Jay Powell looked annoyed and corrected him. He said, well, wait a second, you're adding another renovation that we already completed to these numbers. He corrected him on the spot. And to me, that reaffirms my view that he's not going to let himself get pushed around by the president on this. What does he have to gain by letting himself get pushed around by the president? And Powell certainly looked uncomfortable, but he said, no, that you're using different numbers. You're moving the ball. By the way, I'll make one other point. I was on Yahoo the other day with my colleague Greg Ip, who made a very interesting point that the border wall at the South was originally supposed to cost $12 billion. Congress just allocated $48 billion to that. Air Force One is costing $1 billion to refurbish. To me, the idea that Washington is all of a sudden getting annoyed at cost overruns on big projects is kind of silly. Name anyone who's done a big building project in the last few years that hasn't run cost overruns.
John, I wanted to get your thoughts on this interview that Mohammed Al-Arian gave, where, I don't know if you saw this, John, where he seemed to say, listen, he thinks Jay Powell should step down. And the argument seemed to be, John, that he was making is that if Jay Powell stepped down, it would diffuse a lot of this. It would minimize the attacks on the institution of the Fed, and that would help maintain Fed independence. What do you make of that argument?
I disagree. I think that if Jay Powell steps down and the president gets his successor, as I said a moment ago, that successor is going to have to make some kind of implicit or explicit promise to the president of the United States that he's going to cut interest rates. And there goes the Fed's independence. I don't think stepping down would diffuse the situation at all. And I think that Powell's leverage at this point is in sticking around and trying to have some kind of orderly transition over the course of the next few months. I don't agree with what Mohammed said on that issue.
John, great to have you on the show, as always. Thank you.
Thank you.
Tesla is on a rocky road with CEO Elon Musk warning of few rough quarters. In today's chart of the day, we're looking under the hood of the struggling EV maker, and Yahoo Finance's Josh Schaefer joins us now with a closer look.
In today's chart of the day, we're taking a closer look at a key metric for Tesla in its current business, its car business. Of course, Tesla is often a stock that trades at a high valuation. It trades on perhaps a story about tomorrow. It trades on autonomous cars and potentially robots and plenty of things that could completely alter the business and drive Tesla's revenue higher. But right now, Tesla shares are down about 8%. And here's what I think one key reason is why that Wall Street analysts have been highlighting. Look at the trend we are seeing in Tesla's car business, its car revenue, its vehicle sales. This has been a key metric that continues to move lower. So what we're looking at here, of course, is purple would be your level. That would be how high the actual revenue is. But key that I'm highlighting here with this red line moving down is the trend in green, year-over-year growth. The trend has been lower. Tesla sales, car business fell 16% year over year in that second quarter. That is what Wall Street is talking about today, and that is why Tesla stock, or a key reason why Tesla stock fell about 8%. And it's been interesting just to watch sort of the reaction today because, of course, there are plenty of analysts that have come out and remained bullish on Tesla. Adam Jonas over at Morgan Stanley saying that the long-term thesis might still be intact for Tesla, but right now it's an argument over the car business versus that autonomous business. So the bull's still telling you to focus on the autonomous business, but at least for one day, Josh, one day, it seems like Tesla actually trading on fundamentals for a change, and the fundamentals for this company are just quite simply not that great right now.
All right, thank you, Josh. And a big thank you, of course, to Adam Johnson for hanging with me this afternoon. Adam, we were talking off camera. I said, after such a big run off this April low, is it time to book some profits? And you said no. No, we're looking forward.
Yeah, it's very tempting to look sort of at your P&L and pull some and say, oh, I bought this here and now it's trading there, so I should book that gain. Well, no, that's the wrong way to look at it. What matters is not what happened a week ago or a year ago or even longer if you own the thing for a long time, but where you think it's going. And as I look forward, remember, I set on every single name in the portfolio, and there are 41 right now, I set a target. And when the stock gets to that target, I sell a portion, typically about a third, and I rerun the numbers. And if I can get to a higher number on the balance, I keep it. Otherwise, I sell the whole thing. That A, honors discipline, B, allows me to put money to work in new names that I've uncovered. But it also takes the pressure off trying to sort of say, gosh, what do I think, or how do I feel about the market? I am buying and or selling individual names, not the market. And I'm specifically looking forward to where I think those names are going. Yes, the market matters in context, but I'm always looking forward. I'm not looking behind.
Look forward, stay disciplined.
You got it.
The Adam Johnson way. Thank you, sir.